Hello and welcome everyone to today's webinar from United Benefits. To give you an overview of the group life insurance, FIGLI, this is the largest group life insurance program in the world. Everyone has basic, it's automatic unless you waive it. You can waive it. The way that it works is it's your annual basic pay rounded up to the nearest thousand, and then they add $2,000 to that. It does include an accidental death and dismemberment if you pass away in service, and there's an extra benefit under the age of 45. You have this extra benefit, but it starts reducing at your age 35, and it reduces every year until 45, and that extra benefit goes away. And this is the one where government is paying a third of the cost of this for you. You do have some optional coverages available as well, options A, B, and C. We're going to talk about those in more detail. On these optional coverages, the premiums do increase over time. So every time you have a birthday that ends in a 0 or a 5, the costs for these go up, and it can be significant. And a lot of people, you don't get to notice that they're, in most cases, the premium went up. They're just going to start taking more out of your paycheck when you have that birth date. And this is, some people call it the FIGLI trap, is that you sign up for these benefits when you were younger and the cost was very low, but they just continue to go up over time and get very expensive. And sometimes by the time the employee realizes it, it's too late to get outside coverage. The cost has become so expensive and they lose their coverage. So again, sit down with us. We can show you based off of your salary what is going to change over time and give you some additional options. You can continue, reduce, or cancel coverage in retirement. You can't add these back in most areas, birth of a child or an open season. But those open seasons don't come along very often. Every 7 to 10 years, generally there's an open season. So don't drop any of this coverage without putting in supplemental coverage somewhere else. Get that coverage in place first before you drop anything. And again, as we were saying in the very beginning of this webinar, please make sure that you update your beneficiary designations on with all of your different benefits, whether it's FIGLI, whether it's TSP, whether it's your FERS annuity benefits, because that's going to control who receives these benefits in most cases. These beneficiary designations can supersede your will, and so it's very important to keep those up to date. So to give you just a little bit more information on these options, again, we covered what the basic is. It's your basic pay rounded up to the nearest thousand plus 2,000. Option A is a flat $10,000 coverage. Option C is where you can get family coverage, 1 to 5 units in $5,000 increments for your spouse and $2,500 per child. If you have children who are over the age of 22, they've dropped off of this automatically. And so if you're divorced, if you're not married, and you signed up for option C and your children are over the age of 22, sit down with us because you're probably paying for coverage that you don't have, and you need to cancel that coverage and potentially get a refund if you're eligible. But option B is what can have the greatest impact, because this is where you can get 1 to 5 times your salary in multiples of your basic pay. But this is the one that gets the most expensive because it's the most coverage. You know, someone let's just say has a salary of $100,000, nice round number, they can get up to $500,000 in additional coverage. And that can be very cheap when they're in their 30s and 40s. But when the coverage starts going up, again, every 5 years when you have a birthday that ends with a 0 or a 5, the cost goes up dramatically. And in some cases, it's going to double when you hit 50 and 55. It's not uncommon for us to sit down with someone who are in their 60s getting ready to retire. And I've seen cases where they're paying $1,000 a month for life insurance, and they didn't realize it because they signed up for this when they were younger, when they were hired, and just thought their taxes had gone up, but it was this cost for option B. The sooner that you can sit down, take a look at this, let us calculate what your coverage is going to be over time. And if it's appropriate to put an alternative plan into place, you're going to save yourself thousands, tens of thousands, sometimes hundreds of thousands of dollars over your entire career by utilizing a plan that is going to stay in place. The premiums are going to stay in place. They're going to stay flat. They're not going to go up over time. So with that, thank you for your time, your attendance today. We look forward to serving you in the future, and we look forward to seeing you on next month's webinar.